Oh, hi there, and welcome back. So, hopefully things went pretty well for you with the start of exercise 10-9 back on Tuesday. And was it Tuesday? Yeah, Tuesday. Because tomorrow, Thursday, you're going to continue to work along exercise at 10-9. And you'll see I have the answer key here to 10-9. Hopefully at this point in time you saw this anyways and you got a good look at it. You'll see that we have an ending balance in our 6-column worksheet with the trial balances being $39,300 in both the debit and credit part. And then over here in the income statement, which is where we determine our revenue, or in this case our net income, we had expenses of $7,500. So money out to operate our business was $7,500, but we brought in $9,300 in revenue, and those accounts were 401 and 405. The difference between those two was $1,800. So that's how we end up with a net income when the revenue is greater than our expenses. And then we go ahead and we balance that worksheet right here in column 29 or row 24 of the worksheet. So with this information here, we're going to use this information, and I'm going to have to zip back and forth a little bit between the two, but we're going to use this to complete our income statement first. So let's go ahead and get started with our income statement. I've provided this worksheet for you on the classroom page. It's the who, the what, and the when. And so the who in this case is Job Connect. The what is the income statement, and the when is for the month ended December 31st. We'll just call it 2019 as in our past year. So I'm going to have to kind of review with you a little bit. Hopefully some of this will come to you. But on the first line, we're going to write down the word revenue. All right? And then I'm going to put a colon there, and then I'm going to list with a little indent the two revenues. I'll go to those where I got those from here in a minute. Actually, I'm going to do that first. Let's go ahead and do that really quick. So our two revenues are going to be placement fees and technology class revenue. We have $6,900 and $2,400. So I'm going to go ahead and put those in right now into the income statement. You'll see placement fees revenue. Remember, I'm going to say it a lot, but the word fees means revenue. All right. So it's like charging somebody a fee and you're collecting it. And that amount was $6,900. And then down below, we're going to indent again for the second revenue, and that is technology class revenue. And that total is going to come to $2,400. I don't need to put the dollar sign in front of it. You can if you want, it doesn't matter. Once it's already in one cell, as you can see, it's going to just follow itself down, and we're not changing currency in this document. So easy peasy. And then last, we're going to indent even a little bit more of that little stair step thing going on. We're going to write down the word total revenue, and then we're going to total those two, and it actually goes in the right column. So the right column is going to be our total, and it's going to be $9,300. Easy, right? So we just determined the revenue portion of the income statement. Well, the next portion is going to be the word expenses. These are the things that it takes to run our business. So I write the word expenses. I'm going to hop over there really quick for you. I'm going to take a look at our expenses here, and I'll highlight them for you. It looks like we have 5 expenses. They're advertising expense, maintenance expense, miscellaneous expense, rent expense, and utilities expense. And you can see the amounts there in the worksheet. Okay, we're going to take those numbers, and we're not going to move them over to our income statement. So I'm just going to hop back over there to the income statement, and we're going to list those again, indented ever so slightly. We'll start with advertising expense. And again, because we have more than one, we're going to list them in the left column, okay? And it starts with $3,000 in advertising expense. Baller there. Putting out some good advertisements. We have maintenance expense. All right, any kind of work that needs to be done to our facility, things break, whatever it might be. Okay, maybe we'll call it our bill of Job Connect, right? We all love Bill. He's always working on some kind of furnace or something here at school. All right, that's $800 for maintenance expense. Thank you very much, Bill. We appreciate it. Miscellaneous expense. You know, this is going to happen all the time. And as I demonstrated with you a little bit in my own personal budget, there's just things that show up, right? Especially during this time. I think my grocery bill has like tripled this time around. Miscellaneous expenses, just always a good thing to have in your budget. In this case, they're giving us $800 that they spent in miscellaneous expenses. I probably should write the word expense after that as well. Here we've got rent expense, and that's just to have a facility, right? They're charging us rent to use a building to offer these Job Connect interviews or whatever it might be, and our rent is $2,000. And our last expense listed on the 6-column worksheet is utilities. As you can imagine, that's going to be like your gas, your electric, might include a cell phone, just random utilities that are provided that you use every day. And those are $900, all right? And then we're going to add them all together, and we're going to get the word total expenses. And when we add these 5 items together right here, we come up with a total expense of $7,500. Well, how about that? That seems to match exactly what we did here. We had revenue of $9,300. We had expenses of $7,500. Okay, so now we'll go ahead and determine, all right, our net income. And that's just the difference of $9,300, this number right here, subtract our total expenses $7,500, and when that the revenue is greater than the expenses, we have a net income of $1,800. Easy, right? We just completed the income statement. So I'm going to go ahead and stop this video, and then we're going to do the statement of changes in owner's equity, which you can find right down here below. Okay, so